Most of us think that if we're paying our bills on time, got a little bit tucked away in savings, then we're doing okay. But what if that definition of okay is just dangerously out of sync with the world we're actually living in? Today, we're going to talk about the number, the real number, that can actually keep you safe when the systems we all rely on suddenly stop working.
Okay, let's just dive right into this. Meet Marcus. He makes a decent salary, right? 72 grand a year. He's got about $6,200 in savings. And his banking app, the one, it gives him a little green check mark and says he's on track, so he feels fine. The problem is, he's not. The reality is a world where the doomsday clock is ticking closer to catastrophe than it has ever been, where the last nuclear treaty has literally expired, and where military spending is hitting Cold War levels. Suddenly, his $6,200 doesn't look like a safety net. It's barely a speed bump. I really want to pause on this number for a second. 85 seconds to midnight. The scientists who have been tracking this stuff since 1947, they're telling us in no uncertain terms that the risk of a global catastrophe is higher right now than at any point in nearly 80 years. This isn't just some prediction. It's a massive warning signal from the world's most serious people, and we really need to listen.
And this brings us right to our first section, the illusion of safety. It's all about that huge, scary gap between how people like Marcus feel and the reality of the system they're actually living in.
I mean, the signals are everywhere if you're paying attention. We've got a grinding, sustained war in Europe, daily standoffs in the South China Sea, and conflicts that are threatening to shut down global trade. But maybe the most terrifying signal of all, the taboo against talking about nuclear weapons, it's just vanished. Believe me, governments don't spend money like this, and leaders definitely don't talk like this when things are going well. So let's talk about what actually happens when these big, systemic risks become your personal reality. Because when things really go wrong, the first thing to get hit is often your money. It can just evaporate. And look, this isn't just some theory, it's history. This is a quote from a German school teacher during the Weimar hyperinflation. Can you imagine that? Faithfully saving money your entire life, doing everything right, only to watch it become so worthless that people were literally burning cash for heat because it was cheaper than buying firewood. And this example, this wasn't even inflation. In 1948, the German government just decided to cut the money supply. So if you had savings in the bank, you woke up one morning and poof, 93% of it was gone, just erased, by a government decree before you'd even had your morning coffee. And you see this pattern over and over again. The US government confiscated its own citizens' gold in 1933. Argentina froze every single bank account in the country overnight in 2001. The European Union actually signed off on seizing almost half of large bank deposits in Cyprus in 2013. And just recently in Lebanon, the banks just stopped letting people get their own money out. This isn't some bug in the system, you guys. It's a feature. And here's the absolute most important thing to get from all this. In every single one of these cases, the controls were sudden. They were severe. There was no long, drawn-out warning period. The window to move your money to protect yourself, it wasn't months or years. It was days. And then it slammed shut.
This quote, it just brings home the human tragedy of it all. This isn't a headline from some failed state 100 years ago. This is recent. People literally robbing their own banks with guns to get their own money to pay for things like cancer treatment. That is what a failed system looks like up close.
Okay, I know that was heavy, but you have to understand the problem before you can find the solution. So let's pivot to that solution and talk about a real, tangible number that gives you power in a crisis.
So the real question we need to be asking is, what is that number? What's the amount of capital that actually lets you make choices when everyone else is completely trapped?
That number is $100,000. Now, this isn't just some guess. It's a calculated figure that represents what you could call the minimum viable net worth to cover the absolute essentials of surviving a major crisis.
So why 100K? Because it's designed to cover these 4 critical things all at the same time. You need enough to cover your basic living expenses for a long, long time. You need a fund to physically get you and your family to a safer, more neutral country if you have to. You need assets that act as a hedge against inflation to protect your buying power. And, maybe most importantly, you need rebuilding capital. Because this right here is the critical difference. Look, $50,000 might get you through the crisis, sure, but you'll crawl out on the other side completely broke. $100,000 gets you through the crisis and leaves you with capital to rebuild, and to grab the incredible opportunities that every single crisis creates. The jump from 50K to 100K isn't just more money, it's a total transformation from just surviving to potentially thriving.
So, now you have the number. But here's the catch. Having $100,000 just sitting in a regular bank account in your home country is probably the worst possible strategy. Where you keep it is just as important as how much you have.
A truly crisis-ready portfolio needs to be diversified. You want some liquid cash ready to go for your immediate runway. You want a big chunk in physical assets that are outside the banking system entirely, things like gold and US dollars, which have a proven history of holding their value. A portion could be in digital assets like Bitcoin for its portability. And finally, that rebuilding capital, held in low-cost index funds just waiting to be deployed when assets are selling for pennies on the dollar. And this is why that rebuilding capital is so insanely powerful. This is a real historical fact. While some people were losing everything, the people who held the right assets were able to buy up generational wealth for next to nothing. That's the huge wealth transfer that happens in every single major crisis.
Okay, so for someone like Marcus, starting with just over $6,000, this $100,000 goal can feel impossible. But it's not. It's just a math problem, and it has a clear step-by-step solution.
So here's the playbook. Step 1, kill the anchor. That high-interest credit card debt, it's a guaranteed negative 24% return. Paying it off is the single best investment you can possibly make. Step 2, build the moat. A boring, simple, liquid emergency fund that stops life's little emergencies from becoming new debt. And then step 3, construct the fortress. That means aggressive, consistent investing in the low-cost index funds until you hit your number. This right here, this is the trap that so many of us fall into. Marcus's $580 car payment doesn't just buy him a car that's going to be worth maybe $8,000 in a decade. If he had invested that same money, it would have grown to over $100,000. He's not just paying for a car, he's literally trading his future financial safety for it, one payment at a time. Ultimately, we just need to redefine what we're aiming for. The goal isn't really a dollar amount. It's options. It's the ability to move before that window slams shut. It's the freedom to wait out a market crash instead of being forced to sell at the bottom. The ability to survive for 18 months with zero income. That is what real safety looks like. I want to leave you with this one thought. Every single person who got wiped out in every crisis we've talked about today, they all had one thing in common. They waited. They just assumed the system was stable because it had always been stable, right up until the exact moment it wasn't. The historical patterns are crystal clear, and the warning signals are flashing bright red. The window to prepare yourself is open right now, but it is not going to be open forever. So the final question is a personal one for you. Are you going to spend your time building options, or are you just going to wait?